Hello traders, Gary Wagner here, just about 11:30 in Honolulu, 3:30 in New York on Friday. Happy Aloha Friday, as we say on the islands, December 4th, 2015. And Trending Markets is pleased to report triple-digit moves in the Dow Jones Industrial Average, taking it up over 350 points, 369.96, a 2% gain on the marketplace at 17,847.63. We've seen it trade to a low of 17,482 and a high of 17,866. So we're just shot or off the highs of the day. So traders, we did send out a special trade alert. We sent it out roughly at about 4:30 a.m., which is when the markets are opening up in New York, the equities markets, as well as gold begins to trade. Of course, these are global markets at this point. And I certainly saw a rally beginning to build. Of course, if you recall from yesterday, we put out a conditional buy signal. We were hoping that the market might in fact go as low as 2033. And in fact, the low was 2040. So we missed it by about 7 points. And I realized throughout the day and as it began to trade after hours that we probably wouldn't see those lows come in and be quite achievable. So we simply took it to the market upon the market opening up this morning. Now, we got in at roughly 2053. Market is now up 37 points at 2088. That is a considerable move in the market just over this one day in terms of a time period. So traders, the best way to go over this most recent trade that we got into just this morning, as well as some of my upside objectives and risk-defined stops, which should be roughly at 2040. 2040 is the low, not of this candle, this is 47, but of yesterday's activity, 2040.71. And that was the reason that we actually put the stop right here. I wanted it under this low. Now, the rationale behind trying to get in at 33, and that of course would have been nice, is my sense was realize we're looking at two different moving averages. The dark or light blue is a 200-day, the dotted black is a 50-day. And if you recall from the last trade, not this trade, but the trade we got into just prior to that, we got in at 2023, which is roughly right in this area. And it was based upon the fact that we had come and hit this bottom. Now, that is a 38% retracement, although I didn't know that at the time because I had it fixed at this low rather than this low. But we had a quite interesting scenario in which the market came, tested this area, and then just popped back up. We had a nice rally, came up almost to these highs here, 2109, began to correct. And as I said the other day, my expectation is it's going to be a rather shallow retracement, but I did think that the possibility was that intraday at least, it would come and test this low right here. It in fact did not. And so when we got in, as I said, we got in roughly at 53. This is 59 here. So it's really at this bottom areas where we got in at. We were able to, on just this one day, pick up 35 points. That's $8,700 roughly per contract, $250 a point. So I'm really comfortable with this trade right now. We've been able to nail these last couple of rally modes and do it quite effectively. Now, what is my upside target? Well, I believe that we're probably going to go again and see if we just can't go and take out this 2109. We came shy of it, but we weren't able to take it out. And that is really the way that I am looking to play this. If we get any kind of solid open on Monday, I want to then again move our stops to below the 200-day moving average. But initially we had to put it in so it made some sort of logic or sense based upon the most recent lows in the market. So traders, as I said, phenomenally interesting day. And this itself that we're looking at right now is the dollar index spread against the euro. Euro on the bottom, dollar on the top. We can absolutely see that we did have this market recoup somewhat. As I said on the gold forecast just a little while ago, this being a bullish harami, this being, well, yeah, I guess you would call it an incomplete dark cloud cover. incomplete in that you do have a red candle. However, did not close at or below the midpoint. That would give you your dark cloud cover. Certainly have an inside trading day, and that's what we're getting here. I do expect the dollar to gain some strength. I was really surprised at the dramatic sell-off we saw yesterday, and of course that was primarily due to the strength in the euro. You can see that right here. Now, another really interesting market that is worth noting is crude oil, because crude once again broke below $40, had a low today of $39.60. It's just above it, but only slightly so at $40.11. And my sense is that we are probably going to see this market stabilize in this area and drift lower. Of course, there was an OPEC meeting and they're ramping production up. Go figure. So oil is something we have sidelined because unless we have some strong technical indication that we're going to see this market go into the mid-30s, I don't really see it as a profitable sell in terms of risk and reward. At the same time, I'm certainly not a long player in crude oil at these levels. Now, S&P, great trade under our belt, and we just had a beautiful trade that we got out of at the beginning of the week. And so maintain your long S&P position over the weekend. Maintain your current stop. We'll look to tighten those stops up come Monday. This has been Gary Wagner wishing you, as always, good trading, and we certainly got it this week again. Have a great weekend. We'll talk to you on Monday. Bye-bye.